For millions of working families, one of the largest annual expenses isn't a mortgage or a car payment, it's the cost of childcare. Whether you're paying for a licensed daycare center, an after-school program, or a nanny, these costs are essential for you to stay in the workforce. That is where IRS Form 2441 comes in. Officially titled Child and Dependent Care Expenses, this form allows you to claim a tax credit for a portion of what you paid for care. For the 2026 filing season, the One Big Beautiful Bill Act, OBBBA, has permanently enhanced this credit, making it more valuable for middle and lower income households than it has been in years. Today, we are going to walk through the new rules and show you how to maximize this credit on your 2026 return. The most significant change for 2026 is a massive boost to the credit percentage. Previously, the maximum credit you could claim was 35% of your qualifying expenses. Under the new OBBBA rules, that maximum has been increased to 50%. This 50% rate applies to families with an adjusted gross income of $15,000 or less. As your income rises, the percentage gradually phases down. For families earning between $43,001 and $75,000, the credit remains a solid 35%. For those earning over $150,000 or $75,000 for single filers, it phases down further but hits a floor of 20%. Even at that 20% floor, this credit provides a dollar-for-dollar reduction of your tax bill, which is far more valuable than a simple deduction. Before you start the math, you have to identify who you are paying for. On Form 2441, a qualifying person is typically your dependent child who was under age 13 when the care was provided. If your child turned 13 during the year, you can only claim the expenses paid before their birthday. However, the credit isn't just for kids. It also applies to a spouse or any other dependent who is physically or mentally incapable of self-care and lived with you for more than half the year. This makes Form 2441 a vital tool for those in the sandwich generation who are simultaneously paying for childcare and elder care for a parent who can no longer live independently. The IRS limits the amount of expenses you can use to calculate the credit. For 2026, those limits are $3,000 if you had one qualifying person, $6,000 if you had two or more qualifying persons. If you have two children in daycare and you paid $15,000 for the year, you can only use $6,000 of that as your base. If you are in the 35% bracket, your actual tax credit would be $2,100. 6,000 like 0.35. It is important to remember that this is a non-refundable credit. This means it can reduce the taxes you owe all the way down to zero. But if your credit is larger than your tax bill, the IRS will not send you the difference as a refund. To claim this credit, you must pass the work-related test. This means the care must have been necessary so that you and your spouse, if filing jointly, could work or look for work. If one parent stays at home, you generally cannot claim this credit unless that parent is a full-time student or is physically or mentally disabled. When filling out Part 1 of Form 2441, you must provide the name, address, and taxpayer identification number, usually an EIN or Social Security number, for every care provider you paid. If you used a daycare center, they should provide this to you on a statement. If you hired an individual babysitter, you may need to have them fill out Form W-10 so you have their information for your records. If you cannot provide the provider's TIN, the IRS may disallow the credit entirely. If your employer offers a Dependent Care Flexible Spending Account, FSA, you need to pay close attention to Part 3 of Form 2441. Under the OBB, the amount you can contribute to these FSAs has increased to $7,500 for 2026. Money put into an FSA is already tax-free, so the IRS doesn't let you double dip. Any amount you received from your employer's plan must be subtracted from your $3,000 or $6,000 expense limit. If you put $5,000 into an FSA for 2 children, you can only claim the credit on the remaining $1,000 of your $6,000 limit. Part 3 is where you do this reconciliation to make sure your benefits are reported correctly. While the enhancements to Form 2441 are a huge win for families, the interplay between employer-provided benefits, income phase-outs, and qualifying dependent rules can be complex. Because the maximum credit percentage has jumped to 50%, the IRS will be looking closely at these claims to ensure providers are legitimate and expenses are truly work-related. If you are unsure if your summer camp or after-school program qualifies, or if you need help reconciling a high-limit dependent care FSA with your tax credit, we strongly urge you to contact a tax professional. A CPA or enrolled agent can help you navigate the specific income tiers of the OBBBA and ensure you are claiming the maximum amount allowed for your family's situation. Professional guidance is the best way to ensure your 2026 filing is accurate and that you are receiving every dollar you're entitled to for the care of your loved ones.